Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld and we've got some exciting stuff to talk about. Before I dive into that though, we got to talk about last week. Most of the major market indexes, S&P, NASDAQ, Russell, Dow, kind of flat, boring, even on the heels of major announcements from our central bank and Jerome Powell. But if you're trading alternative investments, I'm talking about crude oil, I'm talking about gold, I'm talking about Bitcoin, huge weeks for them, as well as bond markets. We had the bond yield surging quite a bit last week as well. So let's dive into our Monday Morning Must-Knows. We'll start off with the earnings calendar. You guys know that's always a biggie. And this week we have a lot of smaller names, two big names, but the rest of it's pretty small. As you can see here, we got over 1,000 companies reporting this week. We start things off on Monday with Simon Property Group. And the reason I put this one on here, real estate. What's going to happen with real estate and malls and shopping, etc. So that's Simon Property Group. On Tuesday, you have a new name, which I just added, C Limited, because of its market cap, and JD.com. Now, Wednesday, we get some familiar names with Cisco, and a new one that you may not have seen there called VFS. That is VinFast. Now, the reason I put this on here is I want you guys to do me a favor. Most of the time you don't comment. I see a couple thank yous here and there. Comment on this video. It helps. It helps us. But there's one thing I want you to type in the chat. I want you to do some homework here. And here's what it is. When you look at the number of shares for any stock that's out there, Apple, Intel, Microsoft, doesn't matter, there is a number called outstanding shares. Now, outstanding shares is like the entire pie, the whole pie that they just pulled out of the oven. Float is the slice that you can eat, meaning what's available to you and I as the public. Now, normally, that whole pie, it's most of the pie is available to the public. With VinFast, it's something very, very interesting. So I want you to tell me what percentage of float of the total shares is available for you and I to buy and sell. This is why you do research, and this is why you analyze companies, because when you look at that number for VinFast, there might be a couple red flags there. All right, back to our earnings calendar. We'll dive on to the Thursday trading activity, which brings up some big names. Walmart, Alibaba, John Deere, Applied Materials, NetEase, and Take-Two Interactive. The reason that this one's so important is, of course, Walmart. The issues going on with China, trade tariffs around the world could have a big impact on Walmart and their earnings. So keep your eye on Walmart. That will be a very telling earnings announcement and could create a lot of volatility. And Friday, you've got nothing, just a big goose egg. So we'll move on to our next piece of information. Next is really all about inflation in the Fed. Okay? We heard from Jerome Powell last week after the FOMC press conference talking about inflation. And one of my favorite instructors at Trading Academy is Bill Addis. You know, he doesn't teach too often because he's busy doing things for institutions. He teaches for the Federal Reserve. He teaches for BlackRock and all sorts of big financial institutions. He is the bond king. Now, fortunately for us, he's one of our resources. He teaches a focus class called The Canary in the Coal Mine. It's all about the bond markets and how it rules the world. Now, remember, bonds are massively bigger than any equity market in the world. You could take all of the stock markets in the world, combine them together, and the bond market eclipses that by a wide margin. It is the largest market in the world. Bonds, it's money. So Bill Addis said something the other day, which I thought was very profound. He said, Jerome Powell and the FOMC and the Federal Reserve should take a victory lap because of how they brought us down from 9-10% inflation to where we are today without crashing the market. And I've always been anti-Fed. I'm an abolish the Fed kind of guy. But if you look at what they've done, you got to tip your hat and say, you did a pretty decent job. Okay, take a victory lap. And here's why. Let's start things off with inflation. He cited inflation at the press conference on Wednesday, and here is confirmation of that. Look at the Consumer Price Index. This number comes out Tuesday at 8:30 a.m. Eastern Time, and you can see it's a pretty sharp slide over the past three readings, and that negative 0.1, that's a pretty significant drawdown there, and of course that means that prices are actually dropping. Now that is influenced because of energy prices, and right now the expectations are that we're not going to come out at negative 0.1. We're going to come out at a positive 0.3, which means inflation back to rising. Now, the PPI, which is Producer Price Index, comes out 2 days later on Thursday at 8:30 a.m. Eastern Time, and you can see it also had a massive decline, negative 0.4, which isn't unusual. We saw quite a few back in 2022, and 2023, and 2024, but this is the first time in 2025 we've seen that big drawdown there. So 1 point data, maybe. Right now, the expectations are not negative 0.4. They're actually much higher than that. The PPI number is expected to go from negative 0.4 all the way up to a positive 0.2%. But what's more important is the longer term view here. So here's the Consumer Price Index going all the way back into 2017. And remember, the Fed has been talking about a 2% target for inflation, 2%. Now, where is that? Well, there's going to be a line going right through my head here in a second, so I'll get off the screen. Here it comes. The 2% mark is right here. So we're doing pretty good. If you look at this chart, I would make the argument that we have seen the Fed slowly push inflation lower and lower and lower, right now at 2.4% annualized. And, hey, good job. Take a victory lap, Jerome Powell. Who knows? We might see inflation start to rise here again, but for now, it looks like your actions have worked. Now, our final piece for the day is going to be retail sales. I already mentioned we have Walmart reporting on Thursday. There's a lot of companies reporting next week as well. And you can see the retail sales numbers had a giant pop here, 1.4% in the previous month. What's the expectation? I'll tell you, it's not very good. Right now, the expectations are 0, dropping all the way back down to 0. And why would that be? It's because of people like me that saw all this turmoil, President Trump and reciprocal tariffs and tariff here, tariff there. I knew that prices are going to start to increase, and I didn't want to pay more for things that I knew I needed. So for example, I'm recording this show with a brand new camera. Well, it was a couple $100. Had I waited, it might be $220, $240, $250. I also bought a couple new pairs of shoes because I know those come from Vietnam, and those got hit with big tariffs. So I made a lot of purchases earlier than I should have to beat that rush of increasing prices. Now, maybe I'm not going to be buying anything else for quite some time. And that's probably true in my case and maybe true for your case. So I think the retail sales numbers expectedly are going to drop significantly here down to 0. The big question is what happens next month and the month after that. Do we see a contraction in retail sales because people like me have already spent the money we wanted? That could have a big impact on our market. So as you can see, retail sales, we have inflationary data. We also have a lot of different earnings announcements here. So going to be a pretty fun trading week. I look forward to it. These weeks have just been getting better and better and better with regards to volatility. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.